What is going on, ladies and gentlemen? And we are back with hopefully what is to be another banger. And the reason I say that is because I'm going to be giving you a street smart way to figure out, are we high or are we low? Or in other words, are we in premium? Are we in discount? And a lot of people make videos on how to draw the swing, and it's always different. So instead of actually trying to teach you a technical way to draw it, I'm going to be showing you a street smart way to do it. So without further ado, let's get into the video, and hopefully this is going to help you. So I know quite a few of you probably watching this video probably used to use EMAs. Now, before I put one on my chart, don't laugh at me, because what I'm about to show you is actually a very smart method for determining discount or premium. And if you're really struggling to draw discount or premium, like for example, you watch a video and they show you some really easy example and they show you in hindsight how it bounces off the 0.5. You know, if that's you and you're still kind of confused because you get confused at the parts where it's not easy, such as, let me say, this one maybe, then this video is going to be for you. Because a lot of times you'll see Twitter, you'll see Instagram, and they'll be drawing these random swing points. Like, how do they determine like if we're in discount? So here's basically the smart method to do it. So step one is going to be go to your indicators in TradingView, and I want you to type in EMA. Okay, now don't laugh because this is going to be good for beginners, but type in your EMA, go to the settings tool, and put it on 200. Okay, now whatever time frame you are looking to take a trade on, okay, in general. So if I'm taking the 5 minute, if I'm taking the 15 minute, you want us to be below the 200 EMA for longs and above for shorts. Okay, so basically what I'm saying is above the 200 EMA is going to be your premium. Okay, this is where you're going to only look for shorts, and below the 200 EMA is going to be a discount. So let's say I'm going to the market and I'm looking to take an inversion fair value gap setup. Okay, I want to only long when we hit below the 200 EMA. And some people are like, well, why wouldn't you take this long up here? It works. And you can, but when I promise you that, and this is not financial advice, they'll work way better under the 200 EMA than they will above it. Okay, just trust me. You can see in this example here, we're above it, we're just pumping. And then boom, we go below the 200 EMA, and then we get an inversion back to the upside. And yes, it does close above. However, this is still very close to the EMA. And compared to all this, this is like saying you're very, low compared to what happened the last 200 candles. So it means it's probably good long. Okay, so let me show you guys another example. So another example is right here. Now, this inversion never ended up triggering. It ended up closing way up here, blah, blah. But let's say it did trigger, it would have been a good long because we're relatively below the 200 EMA. And price will naturally, just because of how the market moves, not even because of the EMA, will gravitate towards that EMA again. And again, not because the EMA is a magnet. It's just because if the market's going to go up or down, it needs to manipulate both ways to gain liquidity. That's why the market moves. But it's a very simple way to determine whether you're going to be in a good long or good short. So up here, see how we're above the 200 EMA, and see how we keep getting a bunch of long setups. For example, here we kind of break this inversion, we break this inversion, but look what happens. Every single time we break it, we just go back down. And then price finally comes to this 200 EMA. We go down, we get a potential inversion here, it never inverses. Potential inversion here, you can see this actually never got closed above here. And then boom, first inversion, if it did trigger, probably would have worked. Now, it's the same thing from the other side as well. Okay, when you're looking for short setups, it's literally the same thing. Don't short if we're below the EMA, okay? Because every time we're below the EMA, what happens? We go back up to it. So if you're going to short down here, you're just going to end up getting wrecked. So you can see right here, we're way above the EMA. You can see just how far we are above it, right? So if I'm looking to take a short, I generally want it to be above that EMA. And when I trade, I don't actually draw premium discount. I don't draw the EMA in my chart. My eyes just visualize from watching the last 200 candles if we're relatively high or low. But if your eyes can't visualize that, then this is a very good backup street smart method in order to do it much quicker and much easier. So because this is just so high above the EMA, you know, what's price going to do? Naturally gravitate back, and we kind of come out here and then bounce off the EMA. And, you know, I'm not taking this long here. I don't play the EMAs, but it just tells you where a better entry is going to be. Look at this one. This one's right below the 200 EMA. That first inversion we formed below 200 EMA, it goes right back up. Boom, textbook, you know, end of story. So that's pretty much it. Hopefully you're going to get smart of this. And I really want you guys to get to the point where you don't need an EMA. You can just kind of eyeball it. You know, other people, they try to complicate it by drawing all these swing points like, oh, we're technically not in premium. You know, dude, just shut up. There's so many swing points you can draw from. This is the easiest way in my opinion. And you're just going to find a lot more winning trades. And here are just some examples of a bunch of testimonials, a bunch of profits, and just a bunch of successful students where they put in the work and they become profitable. And, you know, all these guys are living the life that they want to live. So with that being said, here's just some examples. And if you are interested, I do upload on YouTube for free, but I did just start a one-on-one mentorship where it's very, very private, very personalized. It's got a lower acceptance rate than Harvard. I have denied a lot of people. But there's only, I think, 16 or 15 spots left at the moment. And my favorite part of the mentorship, which you can apply at the link below, by the way, is an accountability program. So basically what I did is I created this accountability journal, okay? And I put 4 students in a group, and I basically had them meet once a week where they are going to be accountable for their actions, show their P&L, and just overall make sure that they have partners to keep them in check. I also have a ton of quizzes and exams throughout a bunch of coursework, but that's pretty basic, even though a lot of other mentors don't do the quizzes and exams. And overall, I just get a call a lot, give some people my phone number if you really need it, and I'm very accessible, and I do 2 classes a week. So if you're interested, it's totally free to book a call. Just click the link in the description, and I hope I can see some of you. And for the ones who get denied, just remember, my YouTube is free. Okay, you don't need to pay me to become profitable. This is very private, and I'm uploading videos for free for a reason. I don't want your money. Okay, but this is for people who are going to be dedicated, work extra hard, and people that I want to spend my time teaching who won't waste my time, that I know has a strong chance of becoming profitable. That's it for this video. Don't forget to use code DODGY for an Apex account, and I'll see you guys in the next one. Peace.